All right, welcome everyone. Let's get right into the stock market charts. I'm going to show you guys what I'm seeing. So leave me a thumbs up if you find some value in this content. All right, we're going to start out today with triple Qs, the tech sector, because I think that's really where a lot of the selling's taken place, which has been in the FANG stocks and the tech stocks, the momentum stocks. I haven't seen as much of selling in kind of the value trade. The financials and the banks really held up during this latest sell-off. And then stocks like defensives like Kraft Heinz and things like that, they've actually kind of been rallying a little bit, just kind of holding up and slightly moving higher. So start off with the tech stocks. We've got a rally today. Triple Q's gapped up and they're pushing it higher. So, where does this rally end is really what I'm looking for. Or does it end? Did we just see, was that the correction that we just saw in the tech stocks, and then we're going to go on to make another new all-time highs? So we have to determine that. What I see now on this hourly chart is a downtrend right here. It's right about, let's see if we can mark that out, right about right there. And so you can see on this trend line, we've got a tag right here. This is really where the downtrend started. And we got another tag here. So we're rallying. So I think if we're going to rally, if the continued rally is going to go, then I could see us doing another tag of that trend line. Maybe they'll pop it briefly and then fail. Something to look for there. But I can see us rallying all the way up there. There's also this gap from back here on the 28th, 27th of September. So we could come in and backfill that gap. That gap has not been filled. So maybe a run up. Backfill the gap right there at 369.60. I think from my perspective, that's the most objective area to short right now. So you don't want to short, you don't want to short when stocks are selling off really impulsively. You want to short when stocks are typically rallying into resistance, just like you want to go long when stocks are falling and selling down to support. The Qs from the highs has sold off about, let's check. They did sell off about 8.5%, in that sell-off. So it would make sense that we'd get some sort of a rally here or some sort of a counter trend bounce. I do think the trend at this point in time is down. The major trend has turned down. However, you're not going to just fall straight down. You're going to have counter trend rallies along the way. So look for a potential rally up to that downtrend line. And then this is the area I'm going to be interested in, reshorting the market or adding to shorts. I did cover my triple Q shorts this morning when I saw that we were kind of rallying, recovering this 254.40 area. That was a level that I had marked out. We undercut it yesterday and bounced up and recovered it. So I covered my short trade right in there. Very profitable trade so far. And so no shame in taking some of that profit with me. You could go long. Also, that's one opportunity. I don't know if I'd want to go long right here. The rally's already kind of started. But, that would be an opportunity. From my perspective, I'm really more interested in shorting the what I view as the more major trend right now, which is down. So I'm looking to, let this rally if it wants to up to here and then short it up there. All right, so that's how I'm going to treat that. And again, just set a stop somewhere above, if you're going to short it at an objective area, you want to stop out, if it pops above there and continues to rally, you stop out and you lose small. That's how it works. Looking at the daily chart, this is what that downtrend looks like. So again, I think we've started a downtrend, but yes, we're probably going to rally. We're above the 100-day moving average as well now on the daily. So yeah, I think a recovery of that and a daily close above that would be short-term bullish and could get us all the way back up to here to backfill this gap. All right, that's what I'm assuming. And then likely continuing the next leg lower down to 342.50-ish, somewhere right in there. It doesn't have to be exact, but somewhere right in there. The other thing that I'm noticing on the SPY, let me flip over to that. So here's this red trend line right here, and this is the one I've talked about where I talked about how I thought they were likely going to recover this by the end of the week. Yesterday we were below that trend line right there. You'll see we were just below it, but it wasn't that impulsive. We weren't really just crashing through there. The sellers weren't really stepping up in a big way. So I assume that we're likely going to recover and hold this trend line by the end of the week. And that's what it looks like we're going to do. So on the weekly chart, again, that trend line is a major trend line coming off the 2009 lows. And you can see that we've held that trend line in an uptrend for many years. Back in 2018, it broke. The Fed did everything they could to get it to recover. They got it to a back test, then COVID, then they got it. So on this latest round of all the stimulus, they have recovered the trend line. So there we are right there. We've recovered it. And it's just continuing to kind of hold. So again, until I see a major break of that trend line, I can't get extremely bearish in a big way because we're above that trend line. And again, that's my key pivot trend line for knowing when it's likely time to get bearish in a major way. So until I see a weekly break of that trend line, then we're at support. That's what I'm trying to say. We're at that major support. On the weekly, you can see we dip below it intra-week, but we're back above there. So yeah, looking for that. And I don't want to be short in a major way on the indices at least until we have a break of that trend line on the SPY. Quick look at the FANG stocks, because again, a lot of the selling took place in the FANGs. Amazon, again, is just sideways. We're just slightly below these moving averages, right in the middle of the range. So it's really a no touch for me right here. Top of the range, I'd want to short up here, and then bottom of the range down here at about 2932 is where you maybe look to go long, depending on what the charts say. But again, we're right in the middle, so I still think we're heading to the bottom of the range, next. My main reason is, one, negative divergences right there. You can see, so this new high right here was a divergent high, and we had negative divergence. And then two, this was a breakout above that range, and it failed. Big impulsive break back within the range. That's a false breakout. So we have negative divergence with a false breakout in the middle of the range. I think we're heading lower, but obviously we could stall out here or bounce or whatever, but still think we're going lower on that one. Google, I adjusted my trend line slightly on the weekly just to kind of capture all the reactions on the weekly chart, and you can see where we're at right now on this weekly chart. We are, basically right at support. We intra-week could dip below it, but the buyers have stepped in and we're kind of holding that as trend line support. So again, unless there's some sort of impulsive sell-off to end the week, then we're likely going to hold this and maybe get a bounce. So no break of major support on the weekly chart, and you want to see that to get bearish in any major way. This thing has come down from the high. It's already sold off at the low, about 11% in this. That's a correction in Google. So maybe that's all we got. I don't know. So we'll need to wait and see. Oh, looking at Microsoft, a couple things that stand out about Microsoft. Well, we got the support line right here at a 284.02. We've been chopping around there. We're above it right now. So, yeah, it looks like this one's going to hold. This is one of the stronger looking charts of the FANG stocks from what I can tell. Looks like one of the stronger ones. And, yeah, I still think we're heading lower in kind of the medium term, but we might be due for a bounce for the next, week or so. So I'm not really interested in shorting this one. Apple's got this trend line support right about there. And it's about 141.63. You can see we're slightly above it right now and above the 100 days. So we'll see where this closes out, but at it right now. So it's all about kind of where that closes. So we'll watch that. I think if I flip down to the 60-minute, see on the 60-minute chart, we've got some bullish divergences that have shown up. And I kind of pointed those out yesterday, but there they are on the hourly chart. So that, hourly chart's usually good for kind of a short-term bounce, and that's what I think we're seeing right now. So, again, I just go back to that downtrend line. Oh, let me cover Facebook. And then Facebook broke that bearish rising wedge. You had that huge bearish rising wedge that Facebook was putting in. We talked about how it's just continuing to grind within the wedge, and then boom, you got a break of the wedge. So that's a sell signal on the larger time frame, but that doesn't mean you're going to just go straight down. You don't want to short down here. You want to short on the break of the wedge up here. And then if it bounces, you can look to add to a short or get short if you haven't shorted it. But in general, this is a sell the rip stock. So any kind of rallies, I'd want to look at areas, objective areas to short into or sell into. We got some moving averages ahead, overhead, so those might be proved to be the objective areas to short into. Okay, and here's this value trade I've been talking about. So there's been clear rotation out of growth and into value, and you can see the XLF is kind of hanging in there. So, you know, maybe there's a little relief rally in growth coming on, but we didn't see a complete broad-based sell-off. The financials did hold up in that latest round of selling. It was mostly tech stocks. So, you know, again, I don't really want to be short in any big way on anything unless you're getting kind of a broad-based sell-off. So we'll see where these things head. I don't see any, real key levels. I mean, we have negative divergence. Kind of have that marked out right there. And that continues. Let me mark that out. There's your negative divergence on the RSI and the PPO. But we could run up and pop and make a new high, and that would be a divergent high. So any new high up here would be a divergent high if it happens anytime soon. Likely that will get sold into. So we'll have to watch for that. And big sell signal, obviously, on the XLV, this is not, this is played out already. We've had kind of a leg down. So I'm viewing this as we've started a downtrend. So here's your uptrend in XLV. This is your healthcare sector. Big bearish rising wedge there. Negative divergence right there. As we continued to grind within the wedge, we broke to the upside of the wedge. And you see that a lot nowadays. It's the algos basically playing games. Because this is a bearish pattern, it should break down, but when they break it to the upside, it causes people to stop out. And then a clear breakdown. So you can see, I think this is our first leg down in, maybe what's in kind of a three-wave pattern. But there's your first leg down. We're probably going to get a relief rally, and then we roll over in the future. So, but that could take weeks to months. So we are likely, looking at a bounce now in XLV. If we check the hourly, we probably have bullish divergence. Let me look over here. That's usually see, there it is right there. So there's your bullish divergence on the hourly on XLV. So that's telling me that we're likely going to see a counter trend rally. And so the bigger picture is I think we've started a downtrend, but short term, I think we're going to get that counter trend rally. We also have some support right there. I've got it marked out at about 125.60. So where do we go to on a counter trend rally? Well, if you use the hourly to probably find some key levels, there's a level right there I'd look at, and that's about 129.97. We also have a downtrend line, and we could check that downtrend line right there. Not a lot of reactions on that, so we'll watch that. But I would say anywhere from 130 up to about 131 would be the objective area to short that thing or reshort it or add to a short if you've already done so. And then we ride this thing down for the next leg down, which I think will bring us down to this level, this next level of support, which, I probably need to put a level right here. Looks like we got a minor support right in here. 121.20. And oil, did not sell off at all. Oil continues to rally. It's almost gone parabolic. So this is CL oil futures. And the level I was watching was right here in oil. You can see this little uptrend line. We did break, but they bounced it back and recovered it. So I don't know exactly what to make of oil right now. I'm going to keep an eye on it and see what's going on. We do have clear negative divergence. So let me just extend that out right there on the RSI and on the PPO. Clear negative divergence, but this thing's pointed straight up, so maybe it burns through the divergences. I do think the inflation trade, so oil is part of the inflation trade. Anything commodities based, anything materials based, that's all part of the inflation trade. The gold mining stocks are all part of the inflation trade. I do think the inflation trade is going to be the larger theme for at least a little while, with little spouts of deflation kind of sprinkled in there. So I have a theory. I don't know exactly if it's true, and it's just I think that the Federal Reserve, they're trying to manage the inflation trade. They want the inflation trade to run, but they don't want it to run too hot too quickly. So what they need to do is manage that trade a little bit. And the way they do that is hint at taper, hint at rate hikes, talk about taper, talk about rate hikes. The market sells off into that because they're anticipating a rate hike and a taper. And that takes some hot air out of the market, as well as the inflation trade. And then they can kind of ease back and say, oh, you know what, the market's kind of softened up. We need to give it a little more room. We need to, we're going to push the taper out and the rate hikes out a little bit longer because we, things aren't as strong as they need to be. And that way they can kind of manage the inflation trade by kind of easing it back and then letting it, and then letting it run, easing it back, letting it run. I think that's what they're trying to do. And so in that scenario, the inflation trade is going to continue to work over the bigger picture with periods where, you have counter trend moves. And that brings me to gold. So gold is one of the, it's one of the major inflation plays. And, back here during the COVID drop, after they printed a bunch of money, gold was one of the first commodities to really sniff out future inflation. So gold from the COVID lows, this was just liquidation selling basically. But when the Fed started actually hiking or cutting interest rates back in 2018, when the market really crashed about 20% back during the Christmas time of 2018, the Fed reversed their stance from interest rate hikes to interest rate cuts. And gold was the first to start sniffing out the future inflation that was going to come. And you can see here that gold basically has been in a bull market really ever since. But the trend really started back there in 2018. This was forced liquidation. But after they did all their money printing, gold just rallied. And it was one of the first commodities. It beat oil to the punch. It beat the ag commodities. And it rallied, about 42% from the lows all the way up there to 2,072, making a new all-time high. All right, so and then gold's been correcting ever since then, and gold, while some of the ag commodities and oil have been playing catch up on that inflation trade, and they've been rallying. So I think that's gonna possibly how it's gonna work. Is gold's actually leading the charge. You're gonna see gold's been correcting. I think gold's ready to start the next leg higher in this inflation trade rally, while maybe oil and some of these ag commodities come in a little bit and we have a correction in those. So things to look for on that. Now going to the levels of the technical levels on gold, again, this trend line down here, that's your bull market trend, major bull market trend. And you can see we just recently hit support there. And when we hit that support, we put in a divergent low. I've talked about that repeatedly for months basically. And so you'll see we hit that, making an equal low from back here, and yet the momentum was a higher low on momentum. All right, higher low. So that's bullish divergence. And then recently we came down close to the trend line again, but the buyers stepped in and snapped it back above. So we're above that 1755 level, which was a kind of a level of support / resistance, kind of a key pivot level. You can see back here we held. But it's not a definitive level. We've cut through it a couple times, so it's we're above it now. Doesn't mean a whole lot, but it's more important, I think, that we've held this trend line, this bull market trend line. So I'm looking for gold to really continue to move higher. It's not going to just shoot to the moon. It's going to grind higher. Bull markets typically build slowly and they just kind of grind higher, and then they end with a bang where they just go parabolic and everybody piles in. And that's usually the end of a bull market. But I do think that we're likely going to continue to see upward price movement over time in a slow and steady bull market in gold. The miners haven't quite caught on to this yet. So that's interesting. I want to see these miners really start to lead the price of gold. So we'll see, I would expect the miners to start to run before gold actually really starts to run in a big way. But we're still holding the support on GDX. So I've got it marked in blue. This was kind of, here's your August, there's your peak, and then we started the correction, big long correction, downward price channel. We broke out of that downward price channel, and we've been back testing that trend line pretty much ever since, creating kind of a secondary downward price channel. and also a bullish falling wedge. So let me change the color on this one. Okay, I changed it to blue. So we've got this bullish falling wedge pattern now, which means we continue to fall, but it's a bullish pattern where we're looking for a breakout to the up out of this pattern. We do have bullish divergence. Look at the PPO. We're just continuing to hold that bullish divergence. So as long as we can hold that, that still looks good from a momentum perspective. And then we're just looking for price to start to follow. All right, so we're holding the trend line. We've just been kind of grinding along it, tagging it, rallying, coming back, hitting it, rallying. One of these times we're likely going to break out of this pattern and start that uptrend. Quick trade idea here, Royal Gold RGLD. So this one's obviously just been, pretty much getting crushed. It from the highs, the all-time highs that this one put in, or at least the recent highs, it's down 36%. So that's consistent with a good correction within a bull market. But this one's really more gone sideways recently. One thing to look at, though, we've got this level of support right here at 94.46. You can see that was resistance there, and there. And then when we broke above, this is COVID, so the COVID crash. This was forced selling. You kind of want to just X all this price action out. It wasn't really technically based. It was just algorithms just firing off orders, regardless of any, and margin calls. Not even algos, really, just margin calls. So they were being forced to sell. So that is, you just throw that out, but you can see we're basically right back down to that level. 94.25 is the key level of support. We're at kind of major support. One thing you'll notice here on the daily, we do not have bullish divergence on the daily chart. You can see we just have kind of downward momentum, downward price action. So, that's bearish on the daily time frame. But when I flip over to the hourly, I start to see that bullish divergence starting to show up. So you can see it right here. See that? You have upward price momentum on the hourly chart, and yet continued drift lower in prices. So that is bullish divergence on the hourly chart. So I suspect we're going to just chop around here for a little bit, and then we're probably going to hold this level and rally. So one way to play it is obviously you could just step in here. We're at support with some bullish divergence. You could watch this downtrend line right there like that. That's probably what I would do, is wait for a break of this downtrend line on this hourly chart. Let's see, it goes right about there. Wait for a big impulsive breakout candle for an hourly close, and that would likely be your buy signal and set this up for a sizable rally. Resistance, near-term resistance, if we get that, would be 102.09. You can see that's former support that was broken, so that should prove to be some resistance. But even where we're at, if we get that breakout candle anytime soon, that's a potential move of about 8.5%. So there's a trade idea. And obviously we could be a lot more, that we might have just seen might have seen the lows for a long time in some of these gold stocks. It's completely possible that we're going to reverse and start this uptrend that I'm looking for. Quick update on CLOX. I want to point this one out. I've got it kind of circled down here as the buy area. Basically, we got major support down here at 157.50 right there on that trend line. If I zoom out, let me show you. I think it shows up on the weekly. Yeah, so you can see on the weekly chart, that's kind of major support. We've got this upward trend line, hit it there, and we're almost right down there to that support line. So I think a little more downside. I do think we're going to hit that. You can see on the daily, though, we are building bullish divergence. So you see that right there on the PPO, and then the RSI. Let's take a look. And not quite there on the RSI. So again, that's why I think we're likely going to continue to kind of drift lower, chop around a little bit. We'll probably start to see that bullish divergence show up on the RSI as well. If we look at the hourly, yeah, we don't quite have it there on the hourly yet on the RSI either. So again, a little more to go to the downside, but keep an eye on it. I think we're getting close. We probably have another 3 to 5% to go to the downside, and then likely this is going to be a buy, a long trade. So all right, guys, that's all I got. If you're new, check out my stock market technical analysis course, link in the description below. Leave me a thumbs up on your way out or a comment. I do appreciate that, and I will catch you.